Hi, welcome to the Market Alert for Friday, the 16th of June 2023. Just before we get into the Market Alert, just to let you know that this is the last Market Alert of not only this week, but next week I will be missing in action. So the next one will be a week on Monday, which I think is the 26th, isn't it? Let me just check. Yes, it's Monday, the 26th of June. So I'll be back at the coalface then to continue with the Market Alert. Just have 1 week off per year from the alert, and it happens to be this next week. So yeah, let's move on. Have a look at yesterday. Another insane day on the upside, and we'll get into why. But first, headlines: bond stocks and bullion bounce as market calls Powell's hawkish bluff. Hard, soft, or never ever landing. So no, I don't think it'll ever land, will it? It'll just continue to keep moving to the upside with small corrections. They've got the printing facilities, I mentioned yesterday. They've just printed another 4 trillion. There's no ceiling anymore, so they can go for it. Also yesterday, stock surge as market digest Fed, ECB and data into quad witching. That's the interesting bit. Yeah, ECB raised rates yesterday. The market should have really gone down. It went up 25 basis points as expected. But everything is just discounted now, and they continue to move the market to the upside. Behind today's massive melt up, the biggest call buying spree in history. So after historic gamma squeeze, what comes next? Well, we'll have to wait and see today. It's quad witching, which means that all of the derivatives expire for the June quarter contracts. So that takes place around lunchtime. So yesterday there was traders took advantage and bought expiring options, ran the market up and collected the profits on those. So no surprise there, but it was the biggest massive call buying spree in history. That just to go show you what there is absolutely no connection now between the fundamentals and the reality of what's going in the world for most people. So yeah, buy the derivatives, ramp the market on that, take the profits, and then into the quad witching, which means that by the time they open today, those having taken the profits, those will expire worthless, and they trouser the money and onto the next deal. Incredible, isn't it? And what's going on in the background, when I say detached from reality, Fed emergency bank bailout facility usage hits a new record high. Money market funds see small outflows. So the Fed's emergency bank term funding program rises once again to a record of 102 billion, or 1.8 billion from last week. So the banks are asking for the money to cover depositors' funds, and it's just being ignored by the market. So until another bank goes bust, we continue to the upside in the shenanigans that we saw yesterday with the ramping of prices because they bought billions of dollars worth of call options to ramp the market to the upside. Amazing, just to collect that small amount of profit. Economic news for today: FOMC member Waller speaks, and prelim consumer sentiment at 3 p.m. out today as well. What have we got next week? As I won't be here, let me just have a quick look there. We've got it's a bank holiday on Monday as well for the US. Keep that in mind. I forgot about that. Tuesday there's no news. And then Wednesday we're CPI for the UK, and Powell is going to be testifying also on Wednesday. So there's nothing until Wednesday of next week anyway. Also Thursday, MPC rates, they're talking of these rising as well. So it'll go to 4.75, I think, is what the forecast will be. Powell's testifying again on Thursday, so again, keep an eye on that one. And then we're into the flash on Friday. Okay, let's have a look at the markets from yesterday. We'll kick off with the Dow. Big move to the upside, as I say, just to ramp up the value of those call options, trouser the money. And then today we should see a bit more of a lackluster day. So here we go then. We piled on the points yesterday through the 34253 that we had marked up in yesterday's alert. The next upside target is 34490. Now you can see that there, so don't be surprised if we take that out, so we can dispense with this one and this one. That's your new high. It's not an all-time high. If we go to the monthly chart, you will see Just spread this out a bit. There's your all-time high up here. So we've got a bit to go. Yeah, it seems like they're taking all the markets back to the all-time highs at the moment. The FTSE's done its all-time high already this year. The DAX has done it. Nasdaq's done it, and just the S&P and the Dow there. 36,952 is where the market's heading. A few obstacles en route, and of course, barring another bank going down or whatever, then it's free to do so. So the daily chart there, piling it on yesterday. There was a bit of an increase in volume, but we've also seriously overbought at the moment. 30-minute chart, you can see that we were just trading in a range of about 100 points, and then wallop, off we went yesterday. Let's have a look, see how much we actually moved to the close, and brace yourself. 637 points yesterday. The market was ramped up to get the value up on those options so that they could take the profits on them. So a big move yesterday for the Dow. In the German DAX, well, we started off moving to the downside, and we traded down just below the 5-bar moving average in the daily chart. And as you can see there, there's had a 38% retracement as well from there to there. Yeah, bang on 38. So we came back to 38% there, and then the market turned around and moved to the upside. There's your 38% in the 30-minute chart. Let's just get rid of that extension there. So there's, like I say, the 38% retracement. We went through the low. We like to bring it back above the low, don't we? And then we move the market back to the upside. And this range for the afternoon. In fact, let's just have a look on the downside. See what we had down, just to show you the main swing. 134 on the down. And then we moved all the way up to the close overnight, 169. So you can see a massive swing there in the German DAX as well. Overnight, the markets found support at the close, the 50 EMA. Also become overbought with momentum switching back to the upside. These are the targets that need to be taken out in the 30-minute chart. So let's just expand these out so you can actually see what it is we've got. Get a closer look of the overnight action. There you can see. So these are the targets. Interestingly enough, yesterday the market was 6 points short of the all-time high of Wednesday there. So 16,332. The market needs to get through this to have a go at the all-time high. But at the moment, moving up nicely. We are becoming a bit overbought. But again, you can see the pullback there in more detail with the momentum still pointing to the upside. We crossed back over and we've moved up again once more. 5 minutes chart. There's your overnight move coming off the close, moving up nicely. That's in the wrong place. That should be a lot higher on that. So we don't need that one there. I'll just use that when I'm actually trading at the time, so I can see where the all-time is on the daily chart. So yesterday, again, let's have a look. 15th of June yesterday, wasn't it? Just double check. Yep. So we started off moving to the upside. It was very choppy and boring. Market struggled with the close, and also the 200 MA came back, then traded lower. And then you can see as we got down to the low, the market held. Then we had the shakeout in the 5-minute chart, oversold, crossed over, and then off we went. And the market, as we saw, moving up 168 points by the time we got to the end of the trading session, and also making its way now, as you can see there. There's the high, so we're not that far off. That's the where this should be. 16.32. No, it should be the other one, shouldn't it? That'll be easy to spot because it'll be this one that's above it. So this is the all-time high at this level, and you can see that we're going to do this first thing, aren't we? We're just going to run the market up, given the backdrop of the get it out of the way before the quad witching at lunchtime. So profits for the week, 625.15. 2.85 on the profit factor. We've got 68 to 32 win-loss ratio there. So another good week, despite last Friday making up the losses on that, and then ending the week with a profit as well. So I doubt I should be doing much today as I head off, but yeah, another good week, and I shall probably do a few trades while I'm away as well. So let's move on, have a look at the S&P for yesterday. And in the S&P, moving to the upside there, strong move yesterday, massive move in fact for the S&P there, huge bar, which you can see in the 30-minute chart there, driving all the way through, not a single red bar in sight, just kept being pumped to the upside. Monthly chart of the S&P, there's your targets. 4817.5 on the upside is the all-time high, give or take a few points depending whether you look at the official Chicago S&P numbers. So there we go, heading to 78 there, 4525 at the moment. So again, the goal here is to get the market back to the all-time highs before the end of the summer. In the FTSE 100 sideways, doing absolutely nothing. Amazing, I don't know why, but it's not even following the Dow or the S&P at the moment. 30-minute chart, we did see the market move up. Choppy session, as can be seen there, but didn't sell off like the DAX did in the morning. It just kept moving slowly throughout the session. Back to yesterday's high at the moment, looking to try and take this out. In the GBP JPY, this continues to drive higher. We've had this now for the last few days. So if we look at the monthly chart, again, you can see that we're heading towards the 78% retracement. We are back to 2015 highs, as I mentioned yesterday. So we're really driving at the moment to the upside. In the pound, also rocketing yesterday. As can be seen here, we've got a high there of 127.87.2. We need to look at the monthly chart of this as well. There's your upside targets for this market. So we've got another one here and one here and one here as well. All of these areas, whoops, let me just pop that back. All of these areas are going to be targets and resistance areas. So the next upside major psychological level where the selling took place, which happened to be in January 22, is at 137. But before we get there, we've got the 50 EMA and these two fib retracements, plus all of the highs of these bars as well, because that's where selling's taken place as well. And that's in the monthly chart. I love the monthly charts. They give you so much information on where the market's going, its direction, etc. 30-minute chart yesterday, you can see a massive move there. Let's just have a quick look, see how many points we moved up to the close. 146, so yeah, big move there yesterday, and also taking out the high already, and that's because the dollar is moving to the downside. So let's have a look at that. So in the dollar, you see a big sell-off yesterday. That came out of nowhere and sent the market to the upside, that stock markets that is. So you can see there, massive move, which is a positive for the metals, because as I said yesterday, I thought they'd have taken advantage at the moment with it being very manipulative on the part of the bankers to run the market down. But let's have a look at that and see what happened. So kicking off with the silver market, you can see that we traded through 89 and then came back during the total of the day session there with some increase in volume. 30-minute chart, they did what I thought they would do at the start and move the market down. It came to the S3, which is a pretty good clue, because 90% plus of the time the market will reverse off an S3, and that's exactly what it did, as can be seen there, and also trying to get above yesterday's high at the moment. So heading back towards the $24, $24, I think, unbelievable, $24 to overnight to try and get back above this psychological level. I got sidetracked then. I just still can't believe how cheap this is every time I look at it. In the gold markets, also hammered down yesterday, going through the 1931 level, but coming back, as can be seen, also this time off the S2, so a lot stronger than silver was yesterday, which means the gold-silver ratio, let's pull that up, was up yesterday and down a bit overnight as silver plays catch up there. So still in that 80 to 82 region there for the gold-silver ratio. Okay, that's it for this one. This week, I will see you a week on Monday. Have a great week, and let's hope the weather continues here in the UK as well. That's if you like it, of course. And with that, as ever, thanks for watching. See you in the next one.